Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at SPY, QQQ, that is S&P 500 and Nasdaq, and then we'll take a look at individual tech stocks, that is Microsoft, Apple, Meta, Netflix, Google, and Amazon. Now, we have Nvidia's earnings that happened today, and price in the post market you can see at $120 right now. I'll talk about it in another video later once the guidance call and everything, earnings call, whatever everything has completed. And then I'll talk about Nvidia later today. So the price is reacting still to the downside, and looks like structure is weaker on the intraday now post earnings. But too early to say. Let all the stuff happens, and then later I'll talk about Nvidia, right? So, all right, let's get back to SPY and QQ, and you can see all these things are reacting to what Nvidia is doing as well, right? So let's start off with S&P 500. In the post market, it's almost at 556 area, right around here. So the thing with S&P 500 or SPY is that, guys, if we continues to lose this level of pretty much 555 area tomorrow, you can expect we coming down to 50 days moving average or 20 days moving average. That's the direction. Some weakness that may continue 547, and for the confirmation more for that continuation to the downside would be, I would let first it also lose 200 hours moving average, then only some more confidence to the downside or cool off will come. Otherwise, this still remains the level. If it can get bought back up at this pretty much this zone 554 to 555, if it can stay above it, price action on lower time frame, if it still shows double bottom pivots, higher highs, higher lows on the lower time frame, like 5 minutes, right, then things can still continue technically higher, right? So, but yeah, that's the level to watch, the 544, the bottom level, the funnel, before we see more weakness. If we lose that level, that will bring SPY to 20 and 50 days moving average zone. All right, that's then a possibility for the near term. Let's take a look at QQQ now, Nasdaq. So it already lost one of the levels today, that is 473 and 468 in the post market, so somewhere down over here. So it's getting close to 20 days moving average area. We did lose this pivot today, that is at the level of 473. So not just the pivot, but I mean to say multiple pivots, reactions, then a support turned resistance, and now when it got up, sure, it was testing it multiple times, but eventually failed. And overall structure on this has also turned red here, right? So yeah, technically we are weaker on QQQ, and if I take it to the hourly interval, we failed and lost 200 hours moving average. Rebound still are getting rejected. Tomorrow's level you are watching, if we lose 467 and 88 cents, things may continue lower, right? So to the next level, to the downside. So that's a possibility on Nasdaq now. And in other words, you can track somewhere 20 days moving average if we don't get back again to those levels of like 200 hours moving average and 473. As long as we stay below 473.85 cents, technically it's right now not a buying structure. That's what I'm trying to say. So cool off can continue to the downside now. Microsoft, but you have the levels to watch. Any position you take needs to have a stop loss on the other side. Microsoft, no surprise with Microsoft though. We did already break the structure on this right up here, right? And since then we have been just continuing lower, red on this. Now the thing with this is that yesterday rebound at 200 days moving average. I said yes, that rebound is fine. We talked about watch that level, and after that though, that rebound wasn't sufficient enough. I talked about it, that it doesn't make it bullish. We have to see if we become bullish thereafter. We have to capture levels like 417 and so forth. And today we are just seeing much more downside again. Tested 200 days moving average again, but in the post market it's at $408 below 200 days moving average. This is where it is right now. So yeah, right now overall there is a weakness on Microsoft. We are also below 200 hours moving average. Just right the couple of days ago I talked about it, and still lower highs. So yeah, we are still in the downtrend on this, losing 200 days moving average now. Finally, let's see tomorrow if we test now $404. But yes, Microsoft is now, not just now, but it's been weaker from a couple of days ago. But now the last line of defense for any potential bull, if they can't keep it above this level of 410, this thing may little bit, as for the structure, may continue to the levels to the downside, and you will have a stop loss on the other side, right? So that's Microsoft. Let's take a look at Apple. Apple, on the other hand, still remains strong though, guys. Yes, it's going mostly just sideways, but it's still maintaining higher highs, higher lows. With Apple, though, even if any big sell-off comes, but it still stays above 20 and 50 until that sell-off, it's still technically in the bullish structure. On hourly interval, am I seeing weakness on this? And Apple is a very sideways choppy stock. Yeah, I'm seeing sell-off staying at 228, this sell-off, and yeah, so that is acting on it. So, and if this time we lose 200 hours, sorry, 200 hours moving average, next level becomes 223, and then that may start to bring weakness down to that 20 and 50 days moving average on the daily interval that I showed you. But that's until then. Overall structure, it still has a chance over there to get bought back up. Look, Apple, yeah, this thing, if you are shorting it, just short only intraday when the structure breaks or swing for only little while. But I would just suggest use my tool here, and the tool still says we are not even started a bearish structure. We are still in just a bullish structure technically, so I would not want to short it though. All right, Meta. So Meta, we lost the structure on it also 2 days ago, and since then we have been just still being weaker and continuing lower. Very simple. If we lose 515 and 16 cents, which we lost right now in the post market, you are watching now 50 days moving average tomorrow, so that's a likely possibility here, right? So let's go to the hourly interval as well, and hourly interval also we are below 200 hours moving average, and this is the level I have been talking about from last couple of days, 523. If we keep rejecting it, it's just a downside continuation, and we are just doing that. Also on my structural indicator, we are below the cloud, and yeah, we haven't been confirming much upside ground here, so it's in the downtrend, guys, which is no surprise. I have been talking about it already since we got those red candles, right? So yeah. And Netflix, let's take a look at this. Okay, so it's still technically the holding a bullish structure, but I'm telling you it's not far away from showing us more weakness. So yeah, we are not far away from showing weakness here, guys, so just keep that in mind. All-time highs resistance is coming now. When we had this failure again, yes, that was a pullback. I talked about that's a pullback, but now we are seeing a failure of that almost. This may continue down to 50 and 20 days moving average as from where we are if we don't get above 690 and 50 cents. So technically stop loss could be here on the short position and some downside can be traded. But let's take a look at intraday. But I'm seeing that post-market weakness is there. And for much more downside, what you can be watching is the next big move will be below 200 hours moving average, losing with 678 and 94 cents. If we lose that, sure, a little bit more downside into this, we'll start sinking into this blue box zone. But if we also hold 608 and 78 and 83 cents, that also becomes an area of potential rebound. So what you are watching is in the price action here, wicks forming, lower time frames, consolidations holding here, and then intraday upside may come to 689 again. But this is the level to watch now, though, for either a support or a break for the next move, that is 608 and 78 and couple of cents, but you get my point. Google, all right, Google, we have a problem. We lost the structure today again. So let me pull on my indicator so you can see that we have a red structure today. That means we are losing. We have lost the momentum, bullish momentum, that for a couple of days we were having these pivots form. I have been talking about it, but then again retest failed eventually, and now we have got the confirmation. Google from here may continue lower as long as it stays below 164. That's pretty much it, right? And on the hourly interval also, we lost 200 hours moving average, lost the significant level as well. I showed you structure turned bearish as well. And yeah, right now it's in the downtrend. 160 and 23 cents is a possibility. But yeah, it's in the downward structure, guys, all right? Amazon. So Amazon, well, it lost 200 days moving average. That could potentially be this was the last line of defense if bulls had to hold. We never saw any price action confirmed though here. So this is where, if I turn on my indicator, this is where we got the structure back again bearish, the red, and you can see we have been just continuing lower. Get access to my tools if you need access. Links are in the description below of this video. Now, so yeah, we are below 200 days moving average, and if we now stay below this 200 days moving average, below this blue box, in the $170 range, this thing can continue lower. But I will be using this opportunity to buy in coming days a lot of the things, and I'll talk about that on my Junior Trader Dividend Investing channel. Link to that channel is in the description below of this video if you are interested. But yes, Amazon also is in the full-on downtrend. We never saw any price action into this blue box that showed us support. No, what did we see? Just a sell-off, just a downward trend. I'm not seeing any consolidation here with a break of the level to the upside. So yes, and we stayed below 200 hours moving average, and so there was no reason to even buy into that zone because that zone never showed us any support there. Retest of the zone, you can see, is still selling off, right? So yeah, Amazon is weaker. But as you know, if you have been following my dividend investing channel, I am gonna use this opportunity to buy into some of the dividend ETFs. Now, dividend-based portfolio of mine is based off of long-term projections and dividend-based building into the positions, right? Covered call ETFs that I'm buying. And this is where I'm covering active trading as for what levels to watch, how to intraday trade, day trade, stocks, swing trade, right? So complete different way of trading if you're a dividend based investor or a active trading investor. So not investor, active trader, right? Link to my dividend investing channel is in the description of this video if you're interested to know more about that. All right, with that, I'll see you in my next videos. Take care. Bye.